In this raw video, I'll be sharing with you the 4 pillars that allowed me to go from business owner working 16-hour days to consistently profitable trader with tons of free time. Now, the first one is that you need to get your mind right. You can be given the best strategy in the world, but if you approach it with the wrong perspective, you won't even make it through the first hurdle. You need to see the positivity in everything, including challenges and failures. And just remember that if you're not facing any challenges, you're not growing. That's where the growth lies, when you overcome obstacles and hurdles. You also need to leave your ego at the door, because putting personal growth before proving other people wrong is number 1 priority. You also need to look at future with a glass ceiling approach, aka the world is your oyster and the only limits are your own beliefs. Trading is one of the only industries where there is limited downside risk and unlimited upside potential. And lastly, truly nail down and believe in your ability to achieve your goals way beyond any expectation that you have right now. Because again, if you push yourself out there, you will achieve much more. If you say, I want to make 2 to 3K a month and I'm happy with that, guess what? You'll probably only just about stretch to that. But if you exceed that, if you say, well, I want to be making 100K a year, and at the minute you're making nothing, you will grow to that eventually. Just like for me, I wanted to make multiple 6 figures per year, and I'm doing that. Now my goal has changed to multiple 7 figures a year, and I'm well on my way to do that. I've got actionable steps. I've changed my mindset. I'm seeing an in-house psychologist to help me with that, to change my thought process behind things, almost rewire my brain to allow me to put myself into that chair that I've not sat in before. And I'm putting myself into different pots of capital to allow me to get to that stage, which I'll cover later on in the video. Now, the second pillar is strategy itself. So simplicity wins every time. One of the first things I was ever taught, and it's still with me today from a trading perspective, is identifying a trend and trading that trending market until the trend changes. How many of you found a very trending market and surprise, surprise, you have a very, very good trading week? Whereas on the weeks that you perform badly, if you look back over that week and it's very choppy, whether it's the 15-minute time frame, the 4-hour time frame, it's just very choppy. There's no high highs, high lows. There's no lower lows, lower highs. You get a mixture of both, right? So trading with the trend is ideal, and that should be built into the very start of your week, if not a Sunday market analysis, looking at the markets and filtering down your watch list down to the assets that are trending the most, that are the clearest. Sticking with this very simple concept will simplify your trading, it will remove anxiety, and you will dramatically, not to mention increase your win rates, because you'll be focused on higher probability trades, but you'll also be able to hold on to your winners for longer. Like, I'm in a long trade on gold right now. Today's the 17th of June, and I executed this trade, I'll put it on the screen now, on the 20th of May. This is on a swing account with FTMO, and I'm still holding it. We've got a bullish market, a bullish index, 1 position, I have a clear target. The anxiety is completely eliminated. I don't have any anxiety whatsoever. Another thing is, instead of flicking through endless amounts of forex pairs, commodities and indices, focus to begin with just on one and master that asset, especially in your journey to becoming consistent. I see it all too often. I'll jump into coaching calls with students, and the first thing I notice is the 25 different assets flickering on the right of the trading view. And I'm like, is there any reason why they're there? And most of the time the answer is, no, there's no reason. I just like them there. And I'm like, well, if they're there flickering at you, you're gonna look through them just out of curiosity. That's the way the human brain works. So remove them. And if you're looking at just one market, if you're just trading gold, or if you're just trading NASDAQ, just have that asset and delete the rest of them. Don't even look out of interest, because your subconscious mind is going to remember the data it saw, and that's going to edge itself and creep itself into your trading. You just don't need it. Same goes for trading sessions. My personal favorite session is New York. Even though I'm in the UK and I'm able to trade London session, New York is typically where most of the trading volume is for the day. I can also see how Asia and London have played out already, and New York more often than not takes liquidity resting above or below previous sessions of that day. So London highs, London lows, Asia highs, Asia lows. There's a lot of manipulation, and then New York provides most of the time the reversal or continuation of the rest of the day. Last but not least, in terms of simplicity, it's how many time frames you're looking at. So the more time frames means more opportunities, yes, but in the early process of becoming consistent and profitable, you need to be looking at very few time frames. So For me, I still to this day focus on mostly 2 time frames. I look at the 4-hour mostly as my key driver, my higher time frame bias, and then 90% of the time my entry comes off the 15-minute time frame. So I'm going from a 4-hour straight to a 15-minute. Yeah, so my suggestion is that you focus on the higher time frames, such as the 4-hour for bias, 15-minute for entry, and don't waste too much of your time looking at other time frames. Just wait for your rules to align on those 2 time frames, even if it means you're only taking 1 or 2 trades a week. Less is often more. Third pillar is capital. This is an interesting one. So, but what if I only have $100 to my name, you might be asking. Right, I understand, first of all, you don't have large amounts of money, and that's probably one of the reasons you've got into trading. However, if you have no money at all to invest right now, what you need to do is to find some kind of employment or some kind of side hustle that doesn't require any startup capital and save up, right? You can't get into trading if you've got nothing to spend right now. You'll need to spend something on education, and even if you don't and you rely on just like YouTube content, that's fine. It'll just take a lot longer, in my opinion. But even then, you have no capital to trade. You can't just put $100 in a personal account and expect to be one of those traders that flips it into $1 million. Like, it's very rare for that to happen, and it's most likely that you'll blow your account a few times first before you make it big, so that $100 is gone. So the best thing to do is to find some employment and save at least a few $1,000s if you can, and then you've got something to invest in yourself, whether it's education or whether it's into capital through prop firms, and then you can start things off from there. So you might be asking, okay, what if I have a few $1,000s to invest? What would I recommend? I would say if you don't already have a system in place, you don't have the confidence when you look at TradingView and you're not involved in any kind of mentorship, that's the first route that I would take. I mean, the first 5 or 6 years of my trading journey, I was always paying some mentor to help me. The same goes for even my previous business background, which was fitness. I was in the fitness industry for 20 years. I worked in gyms for 18 years, and I owned my own fitness business for 12 years. And as soon as I became self-reliant, as in not employed by someone else, when I was self-employed, from day one, I employed a mentor. And I had 3 fitness business mentors during that whole period. And it wasn't until around a year before I sold that business that I stopped working with a mentor, because I didn't need them at that stage. I was looking at exiting the company. But trading is no different. Like if you are not where you want to be and you're not too sure how to get there, the best thing is to find a mentor, follow them, listen to them, take on their advice, and you'll get somewhere with it, of course. And that requires some investment. Once you've learned the skill, it's about getting the capital. So you need $500 to maybe $1,000 saved up to be able to invest in prop firm challenges. You don't need to invest that all in one go. Some of them, like Apex, you're trading futures, that's on a monthly basis rather than upfront, but you're still gonna eat into that capital if you're not taking payouts. So you still need some kind of a cash buffer in your account to be able to invest in there over the next 3 to 6 months. Only purchase challenges that you can comfortably lose the fee if you fail the challenge, of course. Don't over leverage, over risk. And I wouldn't recommend borrowing money on credit cards or loans to be able to pay for prop firm challenges. Again, go back to what I said earlier, work, earn some money, save the money, and then reinvest that money. And keep doing that while you're taking these challenges, by the way. Now, in my personal opinion, prop firm challenges are not easy, of course. I mean, you need to make anywhere between 8 and 12% on phase 1. Those that are 2-phase, you're then going to make another 4 to 8% on phase 2. And it's not easy, right? I mean, 99% of traders out there in the retail space are failing challenges in the first few days. But that's because they're rushing into it too soon. Or maybe they're ready, but they're letting their emotions get in the way and they're trying to rush that process, even though they've got the skill and they know how to trade. They're waiting for their setup, like I am on the screen. I have an alert on DAX right now. I have a level of liquidity. I'm waiting before taking shorts and targeting the 4-hour lows, but I'm not going to get involved now because I know that that's not what my analysis is. So it's about having the patience and the discipline to wait for it. Let's talk about actual prop firm strategies now as pillar 4. So it's a game of maths, and you don't need to be good at maths to figure it out. Trust me, I failed in school. I'm not blessed with academic genes whatsoever. You just need to get your head right and understand the simple numbers. There are traders out there making 100K in a day, and I get that. See that as motivation, not as a benchmark for you and your own trading results. Realistically, if you put money into the SP500 and you let it sit there for a year, if you're lucky, you'll gain 15%. On average, maybe 8-10%. And that's over a year. So how can you as a trader expect to make that in a week or a month? Every month, right? It can happen, but it's also very rare and difficult. Put it this way, if you can make just 1% a month consistently on average over a year, then the steps that I named earlier in the video up to now, you're well on your way to making 10K plus a month. I'll break down the numbers later on. But again, only start off with a prop firm challenge amount you're willing to lose if you fail. However, any money you make from a side hustle, 9-to-5 employment, or from earlier prop firm payout withdrawals, reinvest that back into more prop firm challenges with larger capital. Look at these numbers. So 1% per week gained on a 50K account is $2,000 a month. Still good, right? On a 50K. 1% a week on a 200K now becomes 8K a month. You're almost there. You've probably quit the day job or replaced the income by now already. But 1% a week on 400K is $16,000 a month. So you can see a pattern emerging here. The strategy's not changed, the person's not changed, you've not changed, and the plan has not changed. The only thing that has changed is the amount of capital that you're trading. And now that you've gone from 0 to 10K a month, plus aiming for just 1% per week is highly realistic. You're no longer chasing 4 or 5% every day that you open TradingView. You're coming into the markets expecting or planning to make 1% per week. If this is your first time here, my name's Scott Taylor. I've been in the retail trading space for over 10 years now. And in the last year to date, I've made over $200,000 in verified prop firm withdrawals. I've also been recognized by FTMO as one of their top traders. And I've come from a place where I used to own a small business, working 16 hours a day, having no time for myself or my family, to now working from home with little as 2 hours a day, with all the freedom. I can take my kids to school, I can collect them from school, take part in the parent evenings and go to sports days, and focus on my own health and my own hobbies now in my own free time. If you're a small business owner like I was, or if you're a professional making good money but don't have the time or the freedom to be able to enjoy life, and you want to learn how to trade to be able to either supplement your income and reduce your working hours, or completely replace the 9-to-5 income so you can work from home like me, then I do work closely with a small group of traders one-on-one for 12 weeks. This is not a large Discord community where you get thrown into 2,000 members, just given a video library with no direction. Your hand is held through an intense 12-week mentorship where we take you from 0 to funded and consistent and confident in that 12-week period, or I'll continue to teach you until you are. Just check out some of my student testimonials. This is just over the past few weeks alone. If this is for you, click the link below and book a strategy call. There's limited spaces available each month due to the personal nature of the mentorship. And if you're here just for the free video, I hope you enjoy. Leave a comment below and let me know what value you took from this video. Make sure before you leave, guys, by the way, to hit subscribe, support the channel. I upload videos every single Thursday. Turn the notifications on so you don't miss them, and I'll see you in the next video.